let's do some value hunting in an area that's gotten tons of investor interest over the past 4 or 5 years, and that's EV stocks, electrical vehicle stocks. But we're cheating a little bit. We have kind of a sneaky.
We're cheating a lot. We're cheating a lot.
I don't know if that's true. All right, I'm going to go on a little bit of a tangent here before we circle back. Automakers have been not great investments. There have only been a few that have ever been very good investments. But where has always been a good place to invest in the auto industry? The suppliers. So we're going to be sneaky here, and we're going to talk about a company that has a really important role in supplying automakers and is super well positioned as we see EVs become more and more a part of the mix. I'm Jason Hall. This is The Smattering. Before we do that, we've got a great way for you to get 10 more great stock ideas. The Motley Fool sponsors our videos. We have a special link. Go to that link, fool.com/The Smattering. And the Fool is going to give you its 10 best stocks to buy right now. Be sure to check out that link. We're going to get back to it, and we're going to talk about Cleveland-Cliffs. Let's start there. And why is this a sneaky way to invest in the future of EVs?
Cleveland-Cliffs is, if not the largest steel manufacturer in the United States, it's number 2. It's either them or Nucor.
If you went back 10 years ago, this was basically an iron ore producer. That's what they did.
Yeah, almost on the verge of bankruptcy too, but yeah. An amazing turnaround story.
But then they acquired AK Steel. When they acquired it, they locked in the relationship with their main customer as a supplier and a major supplier to the automotive industry.
Yep. AK Steel was previously the largest supplier of automotive steel in the United States. They also acquired the U.S. steelmaking assets from ArcelorMittal, the global steel giant. So you combine that together, and it makes them the largest supplier of steel to the automotive industry in the United States. And if EVs are going to be the big thing, all of the companies that are going to grow their production, not just like the big legacy automotives like GM, Ford, Stellantis, but also, your Teslas, your Rivians, all these other companies, they need steel. And as the premier supplier of automotive steel that makes a lot of the very unique characteristics for steel that you need in terms of manufacturing panels, in terms of doing all the other things that you need to do to mold steel, Cleveland is going to be one of the companies that does it. Now, when we say that we are bargain hunting, this is where Cleveland-Cliffs gets interesting, because at today's price, it is currently trading for less than its book value, which for the most part is not a very common thing you see in a lot of industries. Cleveland-Cliffs is a cyclical industry, so it's never going to trade at steep premiums, but even less than book value is what you would consider a low cost for a company like this. Over the past couple of years, it has done a spectacular job of delevering its balance sheet, paying down debt, and at the same time, a lot of pension obligations that were quite high from legacy businesses. So you combine all that together, and you have this uniquely positioned business that has this growth element with EV steel. You could even say the electrification of everything if you want to get cute with it. And because of that, I think a lot of people should be looking at a company like Cleveland-Cliffs, despite the fact that it's a cyclical steel manufacturer.